Let's talk about IRS pre-summons letters and summonses. What do these documents do to the risk in an audit? What do they mean, and how should you respond? Well, first of all, if you get one of these documents, it's a critical turning point in your audit. If you receive what's called a pre-summons letter from the IRS, you're standing at an inflection point. This is no longer a routine document exchange. The IRS is signaling that voluntary cooperation may soon become compelled compliance. And if you, or more likely your representative, mismanage this moment, the audit can escalate towards criminal tax exposure much faster than you would expect. Today I'm going to explain what a pre-summons letter actually means, how the IRS summons power works, and we're going to talk about the 20-day third-party window most taxpayers and their representatives miss, and how poor handling can increase criminal tax exposure here. So what's an IRS pre-summons letter? What does it mean? Well, most IRS audits begin with information document requests. We call them IDRs. In correspondence audits, you receive snail mail document requests. In field audits, the examiner often asks for records directly. But here's the key. When the IRS believes you're delaying, or your representative is, you're not responding fully, or you're resisting their requests, or, scarily, if they mistrust the information you provided to date, the process escalates. In large business and international tax audits especially, the enforcement sequence is often as follows. First, you get a delinquency notice. Then you get a pre-summons letter, letter 5078. Then you get a formal summons. A pre-summons letter is not yet legally binding, but it does signal something critical. The examiner is preparing to move from informal request to compulsory enforcement. And once that happens, the timeline tightens dramatically in your case. So what legally happens when the IRS issues a summons? Congress gave the IRS broad summons authority. They can require, through summons, testimony under oath from you, from your employees, from your business partners, and your tax advisors. They can force production of books and records. They can force production of financial data from you or from third parties. They can go to banks, vendors, customers, employers, and summons information. If you ignore a summons, the government can walk into federal district court to enforce it. If they show up there, the courts usually ask four main questions. Is the purpose of the summons legitimate? Is the information you're seeking relevant? Does the IRS already have access to this information? Were proper procedures followed? If enforcement is granted and you still refuse compliance, you're going to face federal contempt proceedings. At that stage, the audit is no longer just about tax adjustments. It becomes a federal matter, potentially involving daily fines or incarceration until you cooperate. Let's talk about third-party summons risk and the 20-day deadline. One of the most misunderstood risks in summons activity is the third-party development. The IRS can issue a summons to banks, brokers, business partners, or anyone holding relevant information about you. Once you receive notice that they've summoned those third parties, you typically only have 20 days to file a petition to quash. You should only do that through counsel. Miss that window, and you usually lose the most direct procedural challenge available to you. That means, to prevail here, your counsel needs to immediately assess what's been requested. Determine if the scope of that summons is overly broad. Evaluate attorney-client privilege and work product issues, and decide whether legal grounds exist to challenge a summons. Because once a third party produces records, the IRS begins building a criminal tax narrative, potentially, and narratives matter here. So when does civil summons activity raise criminal tax risk? Well, many taxpayers assume a summons means a criminal tax investigation has already started. Well, that's not necessarily true. The IRS uses summonses in civil exams routinely. But here's where danger appears. Poor responses, inconsistent statements, backfiled records, retroactively created documentation, any evidence of your concealment or your willfulness turns a civil audit into a criminal tax case. Anything that's willfully evasive or misleading. It's not the math here, it's your audit responses. If they appear evasive, manipulative, that record can later support a criminal tax referral. And by the time the criminal investigation department gets involved, the government has already established a structured criminal tax narrative. So, what should you do in responding to a summons? Well, first of all, do not improvise responses. Do not create new documents out of thin air to fix old gaps in data. Do not over-explain. Do not speculate if they call you in for an interview. And do not treat a pre-summons letter like a routine extension request. This is a procedural pressure point. Your counsel needs to confirm what was requested. They need to identify what you can produce, and especially what you can't produce. They need to respond strategically and control communications, especially if there are potential badges of fraud underlying your fact pattern, like significant underreported income, offshore digital activity gaps, payroll tax exposure, or prior inconsistent filings. So, why does dual license attorney CPAs really matter here? How can we help? At this stage, you're managing both civil audit strategy and, whether you know it or not, criminal tax exposure screening. A CPA or any other tax advisor alone cannot advise on constitutional safeguards to protect you. A tax attorney alone may lack deep forensic accounting integration. So, our solution, at the tax law offices of David W. Clausing, our dual licensed tax attorneys and assisting CPAs approach high-risk audits with privilege-centered strategy. We triage the audit exposure. We narrow and prioritize requests. We structure defensible responses. We prevent avoidable criminal tax escalation. And when necessary, we prepare the case as if criminal tax enforcement or litigation likely will follow, because preparation and strategy prevents criminal tax escalation. So, controlled action by experienced counsel prevents escalation. If you've received a pre-summons letter, a delinquency notice, or you're facing escalating IDR responses, or a notice has been sent to a third party, whatever you don't wait, take early controlled action. That often determines whether an audit stabilizes or turns into a court-enforced dispute. Call 800-681-1295 or visit clausing-associates.com to schedule a confidential reduced-rate initial consultation today. The earlier you act, the more options you preserve. To date, we have never had an audit client go to jail. We're either very lucky or very good, but either way, we're there for you.